In this video, we're going to talk about collision insurance. So collision is going to cover any damages that are done to your vehicle stemming from an accident, regardless of who is at fault. So if you caused the accident, if somebody else caused the accident, doesn't matter, collision insurance will cover the damages. Now, notice I said your vehicle here because we've already talked in previous videos about liability insurance. So we've talked about bodily injury, property damage, and so forth. So when we think about damage you might do to another person's vehicle, that would be covered under your property damage liability insurance. However, remember that property damage policy you have doesn't cover any damage done to your own vehicle. So that's where collision comes into place. And collision is typically not part of what's known as mandatory minimum insurance or the car insurance you need to be legal in your state. It's something that is optional. You could pay extra to have collision insurance added to your car insurance policy. So it's just going to give you more coverage. And in some cases, if you're buying a car brand new and you're getting a loan to purchase the vehicle, your lender might actually require you to get collision insurance just so that they know that you're covered. For example, if you were to total the car, that you're not just going to turn around and say, oh, well, I guess I'm not going to continue making payments, and then the lender is out. So in any case, you might be required by a lender, but typically by law, you're not required to get collision insurance. So let me give you some examples of how collision insurance is going to play out. So let's say that you hit another car, you run your car into a building, you hit like a stop sign or a tree or anything like that. In those cases, your car obviously will be damaged. And so collision insurance, if you have it, will cover those damages. If you come out of a shopping mall or something and you find that, oh, hey, my car got dented, somebody must have run into it with a shopping cart and they took off and I don't know where they are. I just am left with this dented car. You could submit a claim to your collision policy and get that dent fixed. So if you lose control of the car and there's nobody else involved or no one hits you or anything, maybe you're just driving along and maybe it's raining or something, you lose control of the car and you crash it into a creek or something like that. In that case, you would, if you have collision insurance, you could file a claim to have the damages take care of your vehicle. So let me just kind of explain how collision insurance works in an actual case and make it a little easier for you to understand. So let's say that you end up hitting another vehicle, right? So you run into somebody else's car. You're determined to be at fault. And what we mean by at fault is that you are responsible for the accident. They determine that you caused the accident, and so your car ends up needing $7,500 in repairs. So let's forget about the other person's car. That would be your property damage liability. We've talked about that in another video. Let's focus on your car. So you need $7,500 in repairs to get your car back up to speed. And so you have collision insurance, so you're fortunate you've had collision policy here, so you're going to get some of these damages taken care of by your insurance company, but you have a $2,000 deductible. So that deductible means that basically anytime you file a claim, you have to pay the first $2,000 in damages. So in this case, think about it. You have $7,500 in damages, so you're going to pay the first $2,000. So how much is the insurance company going to pay? Well, they're going to pay $7,500, which is the damages, minus the amount you pay, which is the first $2,000, that deductible, and that's going to equal $5,500. So this is what the insurance company is going to pay. They're going to pay the $5,500 to help you get the repairs for the vehicle. Unless, for example, if this $5,500 was actually worth, if this was higher than the actual value of the vehicle, let's say that there was an appraisal. So there was an appraisal done and the vehicle was really only worth $2,700. Well, in no case, no matter what the damages would be or the repair costs would be to get the vehicle up and running, the insurance company will not pay you more than the appraised value of the vehicle. So if they look and they've got some official used car guide or something that they use to come up with this appraisal, and they look and they say, you know what, actually this vehicle's worth $2,700, they're not going to cut you a check for $5,500 to go get the car repaired. What they're going to do is just say, look, the vehicle was worth $2,700. We're just going to send you a check for $2,700 and just that's the end of the matter. So in no case will they pay more regardless of what the damages are. They'll just, the highest they would actually pay is the value of the vehicle. Now, what if the other person is at fault? Let's say that the other driver caused the accident and everything else is the same. You need $7,500 in repairs and so forth, but the other person caused the accident, not you. Now you've got two options, okay? So you can do one of two things. One thing is you can collect either from that person who caused the accident, from them personally, or more commonly from their insurance. So you go and you hope, obviously, that this person has a property damage liability insurance policy, and then you say, hey, look, you did damage to my car, and so I want your property damage liability from your insurance to cut me a check for these damages, right? Now, another option you have is you can say, well, I'm actually just going to file my collision policy with my own insurance company. I'm just going to file this collision policy and say, look, hey, I'm out this amount and in terms of repairs and so forth. Somebody hit me. It was their fault, but I just want you to pay out the claim. And then what'll happen is actually your insurance company will cut you the check, but then they will go after that person's insurance or that person themselves. And so what that is actually called subrogation of rights. So we call it subrogation of rights because basically you're saying to your insurance company, hey, just give me a check for this, and then I'll give you the right to go after that person for the damage that they caused in terms of repairs. And if your insurance company is able to get the full amount from that person's insurance or from that person, then they could actually in some cases end up refunding your deductible. So something important to think about now that we kind of understand how collision would work in terms of an actual accident is that the premium that you pay, and now I'm talking about the cost, like every 6 months or every month, the cost that you would pay to get collision insurance added to your insurance policy, that cost will be lower. It'll be lower if you choose a higher deductible. So, for example, you might get an option, your insurance company, your agent might say, look, you could have a $50 deductible, you could have a $500 deductible, or you could have a $2,000 deductible. Now, you might think, hey, I'll take the $50 deductible because then if there's, let's say you come out and your car's dented in the parking lot at the shopping mall, and you say, look, it's going to be $300 to repair this. Well, if it's $300 and you have a $2,000 deductible, then there'd be no sense in you filing a claim with your insurance company because you have to pay the first $2,000 and it's only a $300 claim, so you'd have to pay all $300. So your insurance won't cover anything beyond what the until you get that first dollar past the deductible, right? So if you have a $2,000 deductible, unless the damage is more than $2,000, doesn't make sense to file a claim because the insurance isn't going to pay anything. So you might say, well, I'll take this $50 deductible, and then anytime there's any kind of issue, something where it's like, $100, $200, I can go and file a claim and get my car fixed. But see, the insurance companies know that, and they say there's more risk. There's more risk for them if they're having this $50 deductible. So what they do is to compensate for that risk, they say, you know what, we'll charge you a much higher premium. So if you say, hey, look, I just want to make sure if my car is totaled in an accident or something like that, that I can get paid for the damages. I'm not so concerned if there's a $100 dent or something in my vehicle. I'll pay that myself. Then you want to choose a higher deductible so then you can pay lower monthly premiums in order to get collision added to your insurance